Hi everyone, thank you so much for joining us. I'm Srimati Sridhar and so happy to have here with me today Anshula Kant, Managing Director and World Bank Group Chief Financial Officer. Anshula, thank you so much for taking the time to join us here today. I know it's probably a very busy week for you, so we appreciate the time.
Yes, a very busy week and busy 10 days actually. But thanks for having me and it's a pleasure to be here, Shri.
Of course. You are in charge of the World Bank's financial complex, Anshula. So shareholders have contributed $20 billion since the World Bank was first formed back in the 1940s. Can you explain to us how the World Bank turns this into $800 billion in support to countries?
You know, the simple answer, the straightforward answer is that we leverage the capital base that we have to raise funds from the capital markets in support of the operations that we do in client countries. But you know, that's the simple answer. The story behind that simple answer is that we have a very strong AAA rating for IBRD. And that instills confidence among in investors to actually put in money into the bank for deploying in client countries. They also like what we do basically, you know, the mission that we have, the operations that we do in countries, everything that we do goes towards sustainable development. So, you know, investors today also like to do good with their investments. So there is that. But, you know, if you just step back for a minute to see what goes behind that strong AAA rating, you know, you may say only 20 billion by shareholders, but shareholders have been standing like a rock behind the institution. And that has really, enhanced the what should I say, financial sustainability of the institution. Similarly, if you think about the borrowing countries, they have been excellent in their repayment. So their track record for repayment has helped the institution remain financially sustainable on an independent basis. And that's, you know, over the years, I think since 1945, it has added about more than $32 billion in reserves and surplus. And that goes to the capital base, which we again leverage in turn to raise more resources from the market. Two other points I would like to mention here, of course, which really help the World Bank do what we are doing so wonderfully well, and that is the staff and the knowledge work. So the staff is so talented, so committed. You know, no institution can succeed unless you have a good workforce, a good staff, a good team, and a good management. And similarly, you know, the global expertise that we have and the knowledge that we bring to the table as we talk to our client countries and as we serve them, I think that is unparalleled among institutions. Yeah. So a long answer to a short question.
No, but a very passionate one, and I love that. So Anshula, as part of the evolution process, what is the ambition, would you say, for the World Bank's financing model, and what do you think would change?
So, you know, as part of the evolution process, as you may know, we are trying to enhance the World Bank's mission. We are trying to enhance the operational model, basically to increase a focus on global challenges, including climate change, pandemic preparedness, fragility and conflict. At the same time, keeping a, you know, razor sharp focus on poverty reduction and inequality. So clearly, you know, as you enhance your mission, as you enhance your operational model, significant and substantial additional resources will be needed to deliver on these goals. So what we are doing in the finance complex is looking at our balance sheet. We are looking at our financial model to see if we can enhance financing capacity to deliver to clients. At the same time, again, we are keeping the overall arching principles in mind as we do this exercise, that we need to remain financially sustainable and we need to guard our AAA rating.
Sure.
In this effort, you know, I think we are in a good place today. It's been about 4 or 5 months since we started, this very consultative and iterative process with the board. And today, I think at the time of the spring meetings, I'm happy to say that we have a approval and tacit agreement with the board for a slew of measures which will enhance IBRD financing capacity by about $50 billion over the next 10 years.
Wow.
So, you know, for IDA countries too, of course, the situation is worse. As you remember, we launched IDA 20 1 year ahead of time in response to the COVID crisis. But since then, there have been multiple challenges and crises that have come to the fore. And these IDA countries are today facing multiple challenges. Chief among them is a high risk of debt distress. They have very tight fiscal space to deal with the huge needs that their countries face. So we have launched a crisis response facility, basically to mobilize additional resources, new resources from donors, which we can then leverage to enhance our delivery to client countries in IDA. Aside from this, of course, both for IBRD and IDA, we are looking at other options. We are exploring and working on other options, balance sheet optimization measures, more options which may need shareholder support, and other innovative measures which can deliver more. And this work will, of course, step up as post the spring meetings and on the way to Marrakesh, I think.
Wonderful. And I want to talk a bit about the private sector. How do you think they could be better engaged when it comes to development? And why do you think this might be critical to get financing at scale?
So, as I said, the needs are really very high. There have been so many crises, and then there are the overarching global challenges, like I mentioned it in the beginning, about climate change and health and conflicts, etc. So I think there is a clear understanding and realization that governments and public sector alone cannot deliver what is needed. It has to be all hands on board. So private sector has a huge role to play. I'm sure you're aware, that the World Bank Group has been at the forefront of facilitating private capital and private capital mobilization in these client countries. I'll give you a few examples of recent innovative transactions we have done out of the bank. We did it was a very exciting transaction, a wildlife conservation bond. We issued the bond, and the coupons on those bonds, the investors agreed to channel those coupons towards promoting black rhino population in South Africa. So it's like an outcome based bond. If we succeed in those projects, the investors will get rewarded for the success of rhino population growth. And there is a donor aspect to it as well. Similarly, we did another transaction in Vietnam where, the government is trying to install water purifiers in schools. Because these water purifiers replace coal burning to purify the water, there are greenhouse gas emission reductions, and you can get carbon credits out of this. And those could be then used to reward investors who actually put in the original funds. We, of course, have a very strong catastrophe bond program. We've done a very exciting recent transaction for Chile, and this is a substantial one, $630 million, where we've brought in private investors, bond investors, as well as insurance companies to insure Chile against the risk of earthquakes. So, there are multiple types of such transactions we are doing. And let me tell you another transaction which operations is working on. This is about results-based financing terms, kind of a pilot transaction, where if the country achieves some outcomes, in this case it is about environment preservation and reduction in GHG emissions, then there could be a possibility of buying down the interest rate. So it is results-based financing terms. You need a donor, you need a country, you need shareholders, you need partners. So, I think this space is increasingly becoming more exciting. It is about partnerships. It is about partnerships between us, between donor countries, between borrowing countries, and between the private sector. So, I think the future of innovation and bringing in the private sector will be about these partnerships. And let me also just mention before I end that IFC, MIGA, World Bank, we are working together as World Bank Group in this effort, because it is difficult. While it is innovative, it's difficult to bridge the gap between the risk and return expectations of the private sector. And that is the effort that we are collectively trying to do, Shri.
And like you said, all hands on deck there.
All hands on deck, yes.
Thank
we
you
need
so much.
everyone.
Yeah.
Yes.
Thank you so much, Anshula, for joining us here today.
Thanks. It was a pleasure. Thank you.
Thank you all so much for tuning in. That was Anshula Kant, Managing Director and World Bank Group Chief Financial Officer.